Hey, good afternoon, everybody. It is Saturday, the 11th of June, 1:38 Eastern New York time. Hope everybody had a great week in general and a good week trading and having a good weekend. It's rainy here in Connecticut today, but it's supposed to be nice tomorrow. Anyways, big week coming up news-wise in the Forex market, but that will not be the focus of this video. I actually will be traveling this week, so I'm actually probably not going to be looking at the charts much during the day at all, which is unfortunate, but I will be pretty active at night, though, trying to do some analysis. So the big event this coming week is the FOMC rate decision on Wednesday afternoon. By far, that's the big dog, but there's quite a bit. So I definitely check that out. And with all the stuff going on with the British pound, with Brexit, the British pound is going to continue to be very volatile. So be cautious if you're trading pound pairs. But anyways, that's not going to be what this video is about. So I'm just going to spend a little time on an Elliott Wave pattern that I see on two pairs on the weekly chart. And these are great patterns when you can find them. And although I don't trade on the weekly chart per se, as I've said in other videos, the important thing is that as you're looking through the time frames, which is why I use multiple time frames, and that's why I like MT5, because it has all these time frames versus MT4, which only has a handful, to search for patterns. And these are great patterns if you can find them. Like I said, even if you don't trade on the weekly, obviously it's a very, very long time frame. If you take trades on a time frame like this, you have to have very large stop losses, probably several hundred pips, and you got to be willing to stay with it for a long time. And most traders, including myself, don't want to do that. So, but it doesn't mean you can't trade it. It just means you identify it, and then you go down to a lower time frame, and you look for trades in those lower time frames inside of the pattern. And if you find a pattern unfolding on a weekly time frame, you're going to have trades in that pair probably for weeks or months to come. It doesn't mean it's going to go in one direction the whole time. Obviously it won't. It's going to correct. You're going to have times of reversal, but overall, as long as the larger pattern on the higher time frame is in place and still underway, then you will be able to have lots of trades on lower time frames, say the 4-hour or lower. So anyways, so there's two pairs here, and I'm going to just show you both of them without any lines, and then I'll show you the ones with the lines so you can see them. So first one here is the Euro Kiwi, and of course I'm looking at this general area right here, so I don't know if you can spot anything. And then the Euro Aussie here again weekly, and again looking at this area right in here. So what these are Elliott Wave triangles. And so we'll go to the Euro Aussie with lines. Whoops. And let me go over here. There we go. Okay. So what we have here is a classic triangle that's unfolding. Now, two things about triangles. Well, a couple of things. First of all, they appear generally in two spots. They appear as they always appear in the final in the wave position before the final move. Okay, so in an impulsive move, that would be in wave 4. Okay, because in an impulsive move you have 5 waves, 1, 2, 3, 4, 5. So the triangle would appear in wave 4, which precedes the final move, which is the wave 5 in an impulsive move. Okay, and a corrective moves are ABC patterns, and so the triangle would appear in the wave B position. Okay, prior to the final move, which would be the wave C position. Okay. Now there's different types of triangles. By far the most common is what you see here, which is the contracting triangle, but sometimes you have expanding triangles, which are pretty rare. I did see one on a pair recently, but I can't remember, so I didn't bother trying to look for it. But it's a very low percentage, probably 5% of the time you'll find expanding triangles. You will sometimes see barrier triangles, where instead of having both of these trend lines converging, you'll have one horizontal and the other one rising. So if this was a barrier triangle, instead of a contracting, let's say in a rising fashion, where with higher lows, but you would see these highs equal, so this trend line would be horizontal instead of converging. So barrier triangles actually are pretty common, I've noticed in Forex. So barrier triangles and contracting are by far the most common. Okay, so but this is the contracting variety, which is the most common regardless of instrument. So all right, so what we have here is again, this is the weekly chart. You've got this, this this pair moving up. We had this was a perfect trend right here, 1 2 3 4 5. We had this corrective move down. It's probably an ABC down right here for this corrective move, and then we had this trend up. Okay, now this trend ended right here, and now I've labeled this as an ABC pattern. Okay, so this whole thing is an A, B, and then C. Okay, so here's the A. That's this A right here. Probably should maybe change the color of that just to make it different than the other ones. That's probably not a good color because it's the same color as my candles. I don't know. It really doesn't matter. We'll change it to that. Okay. Okay, so ABC. Here's the A, and the triangle is B, and then we'll have a C wave down. Now inside of this wave B is the triangle. So here's the end of the A right here, and now we have B. And a triangle is made up of 5 waves, A, B, C, D, E, generally. And inside of each one of those is 3 waves. So I don't need to get that detailed though. But anyways, you're just looking for pattern recognition. That's really, Elliott Wave is very much about just visual skill of recognizing patterns as you look through charts. So, and seeing something through the chaos. So, sorry about that. Anyways, so here we have this triangle, and so if we look at the waves, we have A, B, C. Now we're in wave D right here. It's just starting. So this wave D should come down and retouch this trend line somewhere down here. Okay, and then we'll go up for wave E, and then that will complete the triangle, and then we'll have a major move break out of the triangle. Okay, so I'm not saying you should trade any of these moves, although you certainly could, and on a weekly pattern you certainly could trade these moves down as it bounces in between here. I'm not suggesting that you do. I'm not suggesting anything because I'm not making trade recommendations. I'm just showing you these patterns. But on a weekly chart you certainly could. You could go to a lower time frame and look for opportunities to enter short, keeping in mind that your target is down here at this lower trend line. Now it's a pretty significant move on a triangle. I mean, this is from here to here is 965 pips, so there certainly is a room to trade this if you want. And then you're going to bounce back up, and then once it gets back up to this trend line again for this wave E, that's this little E right here, because the labeling tools here for Elliott Wave only have ABC for corrections and 1 2 3 4 5 for the motive waves. So but anyways, so we'll get back up here for wave E, and then we'll break to the downside. And so, of course, again, this is a weekly chart, so it's going to take many weeks for this to unfold. And so then you say, okay, well, once it breaks out of here, how far is it going? Well, the general rule of thumb is to measure the distance between the 2 trend lines here, the widest part of the triangle. And so if we do that, that's 1,852 pips. Okay, so that will be our target once this wave E completes, 1,852 pips. So let's just say it ends right here. Measure it down, and I have this drawn a little bit too far, but 1,852 would take you to somewhere around the 134 area. Okay, all right, so somewhere around that 134 area, this would be the target to the downside. Okay, widest area of the triangle measured from the end of wave E and down. Okay, so here's the end of wave E, somewhere around here, wherever this ends up coming back and touching, and then down. You measure it down, that's your target. Okay, so that's the Euro Aussie. So I may be looking for some shorts here to get down to the bottom here. Once it gets back into this area, I'm going to be looking for longs, potentially back to the top. And then this is really the move I'll be waiting for, but this is obviously going to take many weeks to get there. So move back to the top. I mean, that's still 500 or 600 pips, not bad. Okay, so anyway, so that's Euro Aussie. Now let's go to Euro Kiwi. Again, this one's a little bit more mature. Let's go to the weekly. Okay, so here we are in the weekly. I already labeled this. Take this one off for a minute. So here is this up move right here, straight up. Okay, this trend ended right here. This is a wave A to the downside, and now we're in the wave B triangle. Okay, so up, A, B. Okay, and now we actually have broken out of this. Okay, so 1, 2, 3, 4, 5. Okay, so we've completed this triangle. Here was the end of wave E right here. Okay, so let's see here. A, B, C. Okay, again, we don't have labeling tool for triangles here, so I have to just do it this way. It's kind of cheesy, but it'll try to find an indicator I can do this with. But there's your D, and here was your wave E. Okay, E. Alright. Alright. So don't get it confused with the overall ABC, which is this lighter purple. A, B, C. Okay. This is the A, B, C, D, E inside the triangle. So here's the wave A, B, C, D, E. Okay. Now you can see this one has already ended, and the triangle has already been breached, and this wave C is well underway. So again, where's our target? Measure the widest area of the triangle. It's about, I don't know, 1200 pips. Take it from the high of wave C, measure it down. Alright, takes us to somewhere around the 157 area, so a little bit below where this trend line is. Okay, somewhere around the 157 area. Okay, so, and once it gets to there, and you can see it's almost there. It's got maybe, what's that, another 100 or 200 pips to go. Almost 200 pips. I mean, you could still trade it. It's 200 pips. You go to a lower time frame, you look for a correction, look for the end of a correction, you go down and look for a short. But once it gets somewhere around this 157 area, I'm going to look for this wave C to be over, and I'm going to look for a substantial rally, and that's this line that I drew back up here. Okay, so there's two different triangles. This one is still developing. This one is done, is finished, and is now very mature in its target. And once it gets to about here, we'll look for a move up on the Euro Kiwi. Okay, now considering where the Kiwi dollar has been so strong lately, especially on the news last week, I don't think that the Kiwi really is that strong. I think it's purely a speculative move right now, and so this could coincide very nicely with a reversal in the Kiwi dollar, and to see the Kiwi come back down to earth, and that will rocket the Euro Kiwi to the upside. Okay, so that's the convergence of news, economic, and patterns that I look at. I don't think the Kiwi dollar is nearly as strong as the charts are saying, and so we could see the Kiwi continue to strengthen for a while, and see this pair continue to fall. There's really nothing happening with the euro right now, and then see this take off. This could also be around the time of Brexit. There's a lot of uncertainty what's going to happen with Brexit. Well, it could end up being positive for the euro. Who knows? Nobody knows at this point. So there's the convergence of your fundamentals and your chart patterns right here. Okay, so be cautious of that. But anyway, so this has got a little bit more ways to go, and then I'll be looking for an opportunity perhaps to go long around that 157 area, or whenever this completes. Now if you go down to a lower time frame where I had this labeled before, you can see one of the trends developing here. So this isn't the first one. Obviously the wave C ended way up here, but this is a pattern right here. You see this 1, 2, 3, 4, 5. Okay, see this price gap? This is when the Kiwi news came out this week, and it gapped lower when they held their rates, and they had at least short term, a fairly bullish outlook on the Kiwi, so that sent this pair lower. 1, 2, 3, and you usually see these price gaps usually occur in the wave 3 position. This is just an acceleration gap to the downside. So 1, 2, 3, 4, and then we'll go down for 5. Now I don't know if this will be the last move down, but here's that trend line we were looking at on the weekly. Okay, this is that couple hundred pip move down. So when this when this corrective move ends, I'm probably going to be looking to go short to this trend line. Okay, and you know, I don't know, this correction is not over yet, so I'm not looking to jump in short yet, but at some point I will expect that this will head lower. Okay, so there it is, narrowed down to a 4-hour chart, and you know, a possible tradable event here on this wave 5, which a lot of times wave 5s are not the best to trade. On a lower time frame, they're probably not very good to trade because there's a small risk to reward ratio. But on a 4-hour chart, hey, you know, it's a couple hundred pips. I'm not going to sneeze at that. If I can get a good entry, I'll take that all day. So, and it'll be an easy 200 pips, and you got a nice target to shoot for, and then you're out. And then the big dog, the reversal back up, is what I'm really going to be looking for. Okay, so anyways, guys, there's a couple of patterns. Triangles can be really cool. They can trick you a little bit. You got to be careful, and the biggest thing is you have to be patient with them, because whether they're on a weekly chart or on a 1-hour chart, you got to give them time to develop, and don't rush them. But when they do end, you got a nice trading opportunity breaking out of the triangle, and once the target is reached, which again is, you know, good target is measuring the widest part, and taking that amount and taking it from the end of wave E and measuring, you know, and drawing it out, and then once you hit that target, to look for it to completely reverse the other way and continue the overall trend, in this case to the upside. So okay, so I hope that helps. Hope it was informative, insightful. If you have any questions, comments, leave them here on YouTube. For those of you in the chat, in the Skype room, you certainly could hit me up there too. But I hope it was again, I hope it was helpful, and give you something to think about, and look forward to your feedback. So have a good day, great weekend, guys.